Well, Delhi Airport's Terminal 2 goes into renovation starting today. INDIGO and AKASA flights shifted to Terminal 1. And could this be the end of ride for Blue Smart? Well, it seems that the EV cab-hailing ride partner is now looking at moving its fleet to Uber Green. And tracking the latest developments on Choksi's extradition. How long before the fugitive returns to India? Well, it could be a while given India's track record with extradition requests, especially those with the UK. Meanwhile, CAPITALMIND gets SEBI's nod to go ahead and launch mutual funds. Offerings to include debt, hybrid and funds coming soon. Space tourism is finally taking off. Blue Origin, the Jeff Bezos private space company, lifts off with Katy Perry on board. These are the stories that we are tracking for you on this edition of Morning Brief at 9. But let's begin with our top story. And in yet another twist to his ever-shifting trade policy, US President Donald Trump said that he might offer exemptions on existing auto tariffs. Now, Trump said he's considering modifying the 25% tariff currently imposed on foreign cars as well as auto parts coming in from Mexico and Canada. Take a look.
U.S. President Donald Trump added new wrinkles into his trade policy on Monday by suggesting he might grant exemptions on auto-related levies already in place. He said he was considering a modification to the 25% tariffs imposed on foreign auto and auto parts imported from Mexico and Canada. Those tariffs could raise the costs of a car by thousands of dollars.
I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places, and they need a little bit of time because they're going to make them here, but they need a little bit of time. So I'm talking about things like that.
This comes after the U.S. removed smartphones and other electronics from its tariffs on China over the weekend. Meanwhile, China's President Xi Jinping met with Vietnam's top leader To Lam in Hanoi Monday to discuss establishing stronger ties on trade and supply chains amid disruptions caused by U.S. duties. They also signed dozens of cooperation agreements between the two communist-run nations.
I don't blame China. I don't blame Vietnam. I see their meeting today. Is that wonderful? That's a lovely meeting. They're meeting like trying to figure out how do we screw the United States of America.
The visit, which had been planned for weeks, comes as Beijing faces 145% tariffs from Trump. Vietnam is negotiating a reduction of threatened U.S. tariffs of 46% that would otherwise apply in July after a global pause expires.
All right, so will these auto tariffs also see the hitting of the pause button or not? We will get to know in a few days, if not in a few hours from now. But a day after the Trump administration announced that it would first pause and then set a new tariff policy on smartphones, chips, as well as electronics, markets, especially tech stocks, gained on Wall Street. The S&P 500 closed 500 points up, while the tech-heavy Nasdaq gained 1% in trade. So on your screen, the S&P 500, Nasdaq, Dow Jones, all U.S. stock indices closed yesterday's trading, Monday's trading in the green. But interesting news also coming in from Europe, as Europe also registered significant gains, with Germany's DAX ending the day with a 3% gain on Monday. Meanwhile, Asian markets, which were already inching higher on Monday, received mixed signals in early trade today, with Hong Kong's Hang Seng Index and China's Shanghai Composite Index both falling in trade this morning. Japan's Nikkei suggesting a bullish move for electronic stocks like Sony. That index is up more than 1% this morning. Taiwan's TAIEX, meanwhile, gaining ground after last week's crash, looking good at over 1% rise. Meanwhile, South Korea's KOSPI index is also finding wings in its feet, and that index is up about 0.7 percentage point this morning. On your screen, large stocks including Samsung, LG, which find a big market in the US, inching green in trade. Meanwhile, shifting focus to Taiwan. Well, Taiwan, the semiconductor manufacturer of the world, TSMC, seeing more than 1% gain in trade today. And let's shift focus back specifically to European shares, which saw a boost on Monday, driven by a rally in tech stocks. The surge followed US President Donald Trump's decision to grant exclusions from steep China tariffs on smartphones and computers, offering markets a much-needed breather after weeks of sharp fluctuations. Take a look.
A rally in technology stocks helped lift European shares on Monday. That's after US President Donald Trump granted exclusions from steep China tariffs on smartphones and computers. It provided markets a breather following weeks of sharp fluctuations. The pan-European stock 600 was 2% mid-morning after a third consecutive week in the red. Shares of chip-related companies Infineon, ASML and BE Semiconductor rose after Trump's Saturday announcement of these tariff exclusions. Trump said on Sunday that tariffs on semiconductors would be announced over the next week, and that a decision on phones would be made, quote, soon. An analyst suggested this could mark the start of a phase on tariffs. Weeks of back and forth over tariffs have rattled global markets, dragging the benchmark index down roughly 12% from its record closing high. And Goldman Sachs cut its 12-month forecast on the stock 600 for the second time this month, and said it, quote, anticipated more downgrades. It cautioned that US tariffs and a stronger euro could hurt corporate Europe's earnings. The European Central Bank is set to hold its policy meeting on Thursday, with markets widely anticipating a 25 basis point rate cut. Investors will also pay close attention to policymakers' assessments of how tariffs are affecting the economic outlook, as traders raised bets of rate cuts.
All right, and shifting focus to the tech maker, Apple iPhone maker has claimed the top spot in global smartphone sales for the first quarter of this year, powered by the successful launch of its iPhone 16e. Now, according to data released by Counterpoint Research, the tech giant saw particularly strong demand in key markets like Japan as well as India. Now, shares of Apple also rose as much as 7.5% Monday morning trading.
Apple sold more smartphones than any other company in the first quarter due to the solid launch of the lower-cost iPhone 16e. That's according to a report from Counterpoint Research out Monday, which also pointed to strong demand in Japan and India. Apple had 19% of the smartphone market, just squeaking past Samsung with 18%. This is despite seeing flat or declining sales in the US, Europe, and China. The data suggests iPhone demand remains strong in emerging markets, even as sales struggle in China due to competition from local players such as Huawei and a lack of AI features. A separate survey from International Data Corporation said global smartphone shipments rose 1.5% in the first quarter, with Apple front-loading supply to sidestep potential tariffs under U.S. President Donald Trump. Apple had chartered cargo flights to ferry 600 tons of iPhones, or as many as 1.5 million, to the United States from India in an effort to beat the tariffs. Shares of Apple rose as much as 7.5% in Monday morning trading.
And Wall Street, like we told you, closed in the green on Monday as major indices got a lift from Apple after the White House announced smartphone and computers would be excluded from new China tariffs. The S&P 500 and Dow both gained around 0.8%, while the Nasdaq rose about 0.6 of a percentage point. Take a look.
Wall Street's main indexes ended higher on Monday, with the Dow and S&P 500 each gaining about 0.8%, and the Nasdaq climbing more than 0.6%. Shares of Apple provided a boost after the Trump administration removed smartphones and other electronics from its tariffs on China over the weekend. Shana Orsic-Sissel, founder and CEO of Bonrian Capital Management, said the iPhone maker is one of several tech companies she remains bullish about amid the recent market volatility.
For me as an investor, I'm looking at this market and I'm excited. You're never going to be able to pick the bottom. But what you do want to focus on are the names that you really liked before, trading much cheaper than they were and taking advantage of those opportunities. That may mean buying some today, and then if it goes down further, increasing that position. And for me, those are names like NVIDIA, Apple, Vertiv, Leidos.
U.S. companies have begun to report first quarter results, and with tariff troubles looming, corporate executives may hold back on giving much guidance. Still, shares of Goldman Sachs rose after the bank reported higher first quarter profit. Drug makers such as Eli Lilly and AstraZeneca gained after Pfizer said it would end the development of its experimental weight loss pill. And shares of Bristol-Myers Squibb fell in extended trading after the company said its experimental drug to treat a type of heart disease did not meet the main goals in a late-stage study.
And starting today, INDIGO and AKASA Air will move their domestic flights from New Delhi's Terminal 2 to Terminal 1 as T2 will be temporarily shut for maintenance work. Now, the new Terminal 1 will be fully operational from today. Both INDIGO and AKASA, which operate from Terminal 2, handle around 270 to 280 air traffic movements in a day and serve more than 46,000 passengers daily. Indira Gandhi International Airport, managed by DIAL, is the busiest and largest airport in India with 3 terminals. Remember, T1, T2 and T3 and runways. Both T1 and T2 are used for domestic flights, and the closure of Terminal 2 is part of essential maintenance that will also involve one runway which is already closed for repairs. With Terminal 1 now fully ready to handle additional flights, this change is set to streamline operations while necessary maintenance continues at Terminal 2. And in a major shift within the electric ride-hailing sector, BlueSmart, the all-electric ride-hailing startup, is set to exit its core business and transition into a fleet partner for rival Uber. According to a report, the move comes nearly 6 years after BlueSmart first entered the market in a similar capacity. Sources to some news reports say BlueSmart's shareholders have approved the plan to transfer its fleet, initially around 700 to 800 cars, to Uber in phases over the coming weeks. Once the transition is complete, BlueSmart will wind down its own ride-hailing operations. This pivot follows a major cash burn exceeding 20 crore rupees monthly, despite substantial financial backing from its founder Anmol Singh Jaggi and Puneet Singh Jaggi. Now, Uber, which launched its EV service Uber Green in 2023, aims to deploy 25,000 electric cars through fleet partners, marking a new chapter for BlueSmart as it collaborates with the global giant. Well, time for a short break right here on Morning Brief at 9. But on the other side, the Indian stock markets would have opened, and we will bring you a mood check with our market expert Kranti Bhatini, and also try and decipher for you what should be your investing strategies in volatile times. You are watching Morning Brief at 9.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
I need expert living. I need my career.
The road is calling. Will you make a move? The road is calling. You've got nothing to lose.
Beyond better, the new Tiguan R-Line. Volkswagen.
Bharat welcomes the world to a new era of creativity Waves, World Audio-Visual and Entertainment Summit. Connecting creators through Creatosphere. Wave Accelerator. Waves Bazaar,
where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
In a huge setback for bike taxi services in Karnataka, Tamil Nadu races ahead with 9.69% growth rate, India's fastest growing state this year. Good for Tamil Nadu. You may not be directly involved with what your son or daughter does, but your influence does work. My name is Sudha Sadanand. Welcome to the South Indian.
Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
You are watching Morning Brief at stories that we're tracking for you this morning. Before we get you the update on your investment strategies for the markets with Kranti Batini. Well, India's largest lender, State Bank of India, has reduced its lending rate by 25 basis points following the Reserve Bank's policy rate cut, making loans cheaper for both existing and new borrowers. Now, with the latest round of reduction, the repo-linked lending rate, or RLLR, of State Bank of India would come down by 25 basis points to 8.25%. Now, besides, the bank also cut deposit rates by 10 to 25 basis points, which will again be effective starting today, April the 15th. With the revision for fixed deposits up to 3 crore rupees, the interest rate on 1 to 2 year term deposits on the SBI will be lower by 10 basis points to 6.7%, and deposits having 2 years to less than 3 years maturity will attract 6.9% as against 7% earlier. Now, in case of fixed deposits over 3 crore rupees, term deposit of maturity of 180 days to 210 days have been reduced by 20 basis points to 6.4%, while for 211 days to less than 1 year by 25 basis points to 6.5%. Similarly, for 1 to 2 years, the new interest rates would be 6.8% from 7%, and for 2 to 3 years would be 6.75% from 7%, a reduction of 25 basis points. But it's not just the State Bank of India. Private sector major HDFC Bank has also lowered interest rate on savings accounts by 25 basis points to 2.75%, which is the lowest among peers in the private sector. This move is set to positively impact the net interest margins of the bank, and that's something we are seeing as movement on its stock also today. Now, for balances above 50 lakh rupees, the rate now stands at 3.25% as against 3.5%. The reduction in rate is effective from April 12th as per HDFC Bank's website. Now, another public sector Bank of India has withdrawn its 400-day special deposit scheme, which offered 7.3%. Mumbai-based Bank of India has announced a reduction of 25 basis points in its home loan interest rates, benefiting both new and existing customers. With this revision, the home loan rate stands reduced to 7.9% per annum based on CIBIL score. The revised rates come into effect from today, April 15th. In addition to home loans, Bank of India has also reduced interest rates by 25 basis points across select existing retail loan products, including vehicle loan, personal loan, loan against property, education loan, and Star reverse mortgage loan. Meanwhile, pharmaceutical major Dr. Reddy's Laboratories has denied the news report by a news publication claiming it is looking at a 25% workforce cost reduction, calling it factually incorrect, adding that the company does not comment on market speculation. Earlier, a report published by a business news daily said that nearly 25% of the workforce costs may be trimmed soon, and that several senior executives of Dr. Reddy's Laboratories, including many employees who earn over 1 crore rupees annually, have been asked to resign. The report had also added that employees aged 50 to 55 years working in the drug maker's research and development division have been offered a voluntary retirement. The media report highlighted several high-salaried individuals across various departments who had been asked to resign, but Dr. Reddy's has categorically denied these reports being factually incorrect. And shifting focus now to Mehul Choksi, accused in the 14,000 crore rupee Punjab National Bank loan fraud case, who was arrested in Belgium on Saturday. Well, it looks like he may not be heading back to India anytime soon. Now, while New Delhi has asked for his extradition from Belgium so that the 65-year-old fugitive can be tried here in India, it may be a while given India's prior experience with extraditions from Europe. Now, India signed an extradition treaty with Belgium in 1901, which allows extradition on the basis of dual criminality, including for financial crimes. Now, dual criminality essentially means that an individual can be extradited only if the offence is punishable in both jurisdictions involved. But it prohibits extradition for offences of political nature or in cases where the individual in question can prove he or she is being prosecuted in the requesting country for political reasons. Now, the treaty also says that the fugitive shall be released if the requesting country fails to present evidence of culpability within 2 months. So if the country fails to provide that evidence, the fugitive may not be released. Now, if the UK example is to go by, India's experience with the extradition of Choksi's nephew and co-accused Nirav Modi, as well as former Kingfisher Airlines owner Vijay Mallya, hasn't seen much success. Now, remember, Mallya left India in 2016 while Modi fled to the UK in 2018. They were both yet to be brought to trial in India. But meanwhile, Mehul Choksi is said to have arrived in Belgium last week to get cancer treatment. Prior to that, he had been living in Antigua and Barbuda as a citizen since 2018. His wife Preeti is reportedly a Belgian citizen. Now, CapitalMind Financial Services on Monday said it has received final approval from market regulator SEBI to commence its mutual fund operations under the name CapitalMind Mutual Fund. Now, the company plans to launch its initial suite of active equity mutual fund schemes in coming months, with intentions to gradually expand its offerings to include debt, hybrid, as well as multi-asset funds. The company manages over 2,000 crore rupees in assets for more than 1,400 portfolio management services, as well as alternative investment funds. The newly established CapitalMind Asset Management said its offerings will be rooted in robust quantitative research, disciplined processes, rigorous risk management, and clear investor communication. The company said it is well positioned with its established track record and significant existing reach, having served over 20,000 investors across its research platform CapitalMind Premium, in addition to its PMS and AIF clientele. Its entry coincides with significant market growth, with the industry asset under management, or AUM, surpassing 65 lakh crore rupees and serving over 5.3 crore unique investors. Meanwhile, the Indian stock markets have opened on a very healthy start. Remember, we had a long weekend running from Saturday to Monday, and we missed out pretty much the Monday rally that rest of Asia saw. But this morning, things looking pretty for the broader markets as well as the benchmark Sensex and Nifty. Sensex, Nifty, both with handsome gains of more than 2% in early trade as markets opened just about 10 minutes ago. On the broader markets front, the Nifty mid-cap and small-cap also seeing impressive gains. The small-cap 100 index is up 2%, while the Nifty mid-cap 100 is up about 1.75% or so. Volatility in the Indian markets is today down. The fear index, India VIX as it is called, is down by about 12% or so, down to 17.7 levels. Let's look at the Nifty 50 heat map and see what are sectors making of all the latest that we are seeing from Donald Trump and his administration on tariffs. Well, things looking pretty good for the IT pack, TCS, Infosys, HCL Tech, Wipro, all in the 1% up territory. Infosys, in fact, up about 2%. The IT pack is definitely looking for some gains in trade today. Meanwhile, news coming in of the auto sector, tariffs to likely be paused, and that's what you're seeing on the stocks of Mahindra and Mahindra as well as Tata Motors. See, Tata Motors is up more than 5% in early trade this morning. Meanwhile, Mahindra and Mahindra nearing up 4% or so. On the banking and financial front, HDFC Bank, ICICI Bank, SBI all registering solid gains, and the news that had come in from the deposit rate this morning was around the fact that HDFC could see better net interest margins, and that is something which is playing out for the stock. Meanwhile, SBI, which has also cut interest rates for fixed deposits as well as home loans, looking at some positive start this morning. Joining me on the show today is Kranti Batini. Kranti, good morning. Thank you so much for being here with us. Well, it seemed that India had missed out on yesterday's rally because markets were shut on account of multiple festivals, including Ambedkar Jayanti. But it seems that that we haven't really missed the party. Nifty and Sensex up 2% in trade today.
Yeah, Karthik, you are absolutely correct. Up days, we are missing that momentum because of the holidays we have in India. But by and large, we are following the suit, okay, despite of missing the momentum on those uptick days. If at all those days are negative days, it was a good advantage for India, but those days turned to be a positive days. Nevertheless, we are catching this point of time. One need to wait and watch. We are not out of the woods. Okay, it can be conceived as a strong relief rally, what we are witnessing in the market, but still we are not out of the woods at this point of time. Still the tariff worries are on, but there is a temporary gap for these execution of tariffs and all. But one need to closely watch the developments that's taking place. The narratives are changing very quickly in the markets at this point of time. So one need to be cautiously playing their games, moving their cards at this point of time, Karthik.
All right. So, I don't know, Kranti, if investing in the short term is something that you would like to comment on or not, but do you think Indian investors should have a 90-day window right now to manage their investments? Because we know, at least with as much certainty as we can right now, that the broad tariffs are on hold for a period of 90 days. Should Indian investors be looking at a 90-day strategy right now, or do you suggest that investing should be done only in the long-term period, no short-term gains expected?
Karthik, in terms of the investing is concerned, one need to have a view for more than a year. That should be the investing strategy. Remaining less than 1 year, like as you mentioned, 90 days, taking the advantage about the current mood in the market and to make any kind of speculation in the medium to short term, one need to have a satellite portfolio in these kind of markets. You see, last 18 months, markets have been in a complete range bound. And probably in terms of the long-term portfolios are concerned, by and large, they have not delivered anything in terms of the long-term averages are concerned in the portfolio of the many investors. With respect to less than 1 year, where investors are the medium-term, short-term investing is concerned, okay, what I can say, the delivery-based trading is concerned, one can take the advantages, but by and large, one need to have a strict stop losses at this point of time, because as I mentioned earlier, the narratives have been changing very quickly. What comes as a strong firm statement today, it may not be the strong statement at the end of the day. So the narratives have been keep changing. So one need to have a strict stop losses to do any kind of a delivery based buying and selling is concerned, and also look at the VIX, how violently it's moving. So one need to have these kind of observations on the radar to go for any kind of short-term trading is concerned.
All right, Kranti, so help our investors understand, especially those who are taking the, the mutual fund route and are really dependent on asset management companies and their fund managers and not really actively picking stocks or picking themes. Is this a time to primarily focus, let's say, only on the benchmark indices, do passive investment and not really go for active sector selection or active stock selection?
Yeah, it all depends upon the time horizon and also the risk appetite of the investors are concerned, Karthik. Nothing wrong going in mutual fund at this point of time. One need to have their mutual fund portfolio and one need to continue their approach in terms of their SIPs, regular SIPs are concerned. One can execute those things. There should not be any kind of termination with respect to SIPs are concerned. One can continue their long-term passive investment strategies is concerned. With respect to the stock picking is concerned, one need to have a long-term approach and also look for the companies and the sectors, the specific stocks which have more about the domestic centric nature at this point of time. That those stocks are much more insulated when compared to the companies which have an export-oriented portfolio, or stocks and sectors which are more vulnerable to the external shocks are concerned. So themes like, just to be specific, the power, infrastructure, and also the FMCG, railways, and by and large some kind of a defense. These are the sectors much more insulated than the external specific stocks. Even the healthcare, domestic healthcare is by and large a domestic oriented sector. But the valuations are not that much cheap at this point of time. They're at a premium valuations. Any dips comes, one can accumulate in the medium to short term.
All right. Kranti, what's your view on gold? Because there are conflicting reports on gold as well. Whenever there is talk of recession, gold really rises. Anytime there's a pause on tariffs, markets start going up, gold prices soften. So for an investor in India right now who's looking at everything that is happening in the world, has no control whatsoever on what Donald Trump or his administration will do and which way the markets will swing, do you think this is actually the time to increase the holding of gold in your asset allocation?
So the global macro perspective is concerned, gold has much more legs for the rally because of the global uncertainty, the fear and uncertainty that is taking place in the global arena is concerned.
Right.
And what we witnessed in the gold in the international markets, India had a double whammy where we had a depreciating currency, and global always gold is a dollar denominated asset. And due to the uncertainty in the global markets, what we witnessed, the gold surprisingly rallying in the last fortnight from a $3,000 per ounce to last in 48 hours, it touched a high of 3,250 above. So what we can sense at this point of time is whenever there is a fear in the market, whenever there is a uncertainty in the market, the international investors and institutions tend to go for the safe haven, that is only gold in the medium to short term. That's where the gold has been creating some kind of interest in the medium to short term. But in terms of the jewelry sales in India is concerned, all the companies are declaring the dip in the jewelry sales, due to the high prices in the jewelry, gold prices are concerned. So one need to have a good amount of the asset allocation, depends upon the investor risk appetite and also their time horizon. Definitely gold is a warranted buy on any dips, Karthik, in the medium to long term.
All right, so buy on dip is a strategy for gold in the medium to long term. I want to ask you another question that has been sort of, bothering me over this long weekend. And Kranti, help enlighten me and our viewers here. Whatever Donald Trump does, eventually the underlying belief should be that it is going to bode well for the US economy in the long term, and it's going to bode well for the US stock markets in the medium to long term as well. Is this a time that perhaps Indian investors should look at adding US stocks also in their portfolio?
Very interesting question, Karthik. Just look at 3 months back, a quarter back, everyone was crazy about US market. US is going strength to strength. So let's sell emerging markets and let's go to US. And what we witnessed in India also, unprecedented sell-off, foreign portfolio investors going back to US. And after the Trump administration came into the power, there is a strong narrative. The MAGA is going on. So, but the change in narrative after these tariffs are concerned, let's sell US and go to emerging markets. And in the emerging market space, there was a narrative. There were some weeks, sell India, buy China. And right now, last couple of days,
sell China, buy India.
So there is a quick change in the narratives are concerned, investing themes are concerned. So if you ask me, India looks as a bright spot at this point of time. We are on a sweet spot. But the investors who want to diversify some portion of their portfolio towards the international equities in US is concerned, depends upon the size of their portfolio. By and large, I'm not a great favorite at this point of time to chip into the US Magnificent Seven also. They corrected a lot. The valuations are quite expensive. Until unless the investor is a strong stock picker, I don't think so. There is greater value that's left in the US markets at this point of time. It all depends upon the individual stock picking skills. At the same point of time, what MAGA, let's make US great again. It takes time. It's not an overnight thing that's going to happen.
Right. I know, I was reading somewhere, Kranti, that for Apple to move just 10% of its production to the US could take as long as 8 years, and this is a 2022 Bloomberg report that I was reading. So it's nothing that's going to happen overnight. But let's leave it at that for now. Kranti Patini, always a pleasure having you right here with us on Morning Brief at 9. Thank you for joining us. And moving on now to other global headlines that we are tracking for you this morning. China halts rare earth exports in retaliation to the US tariffs, threatening global supply chains across tech and defense sectors. And it's not just rare earth minerals. China also announces visa restrictions on US personnel who have behaved badly on Tibet-related issues 2 weeks after Washington imposed additional visa restrictions on Chinese officials involved in policies governing foreigners' access to Tibetan areas. Chinese President Xi Jinping strengthens trade ties with Vietnam's Prime Minister during his Southeast Asia visit, signing key cooperation deals amid US tariff tensions. China's exports surge. Tariffs take effect, but weak domestic demand and rising trade tensions threaten future growth. And European stocks rise as technology rally boosts market after Trump grants tariff exclusions on smartphones and computers, offering relief amid ongoing trade tensions. iPhone maker Apple becomes top smartphone seller in the first quarter of 2025 as iPhone 16e boosts demand in Asia, particularly in India and Japan, despite weak sales in US, Europe and China. Apple-led rally lifts Wall Street as smartphone tariff exemption drives tech surge and boosts market sentiment amid ongoing earnings season. Intel agrees to sell 51% stake in Altera to Silver Lake for $4.46 billion, marking first major move under new CEO Lip Bhutan to revamp the struggling chipmaker. Pop star Katy Perry and 5 other women make history with first all-female space flight in over 60 years aboard Jeff Bezos' Blue Origin rocket. These stories on the other side. You are watching Morning Brief at 9.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
On my dear cool. ये एयर कंडीशनर नहीं, AI कंडीशनर है.
In a huge setback for bike taxi services in Karnataka, Tamil Nadu races ahead with 9.69% growth rate, India's fastest growing state this year. Good for Tamil Nadu. You may not be directly involved with what your son or daughter does, but your influence does well. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9. As the US-China trade war heats up, Beijing has hit out at the US by suspending exports of critical rare earth elements, metals and magnets that the West heavily depends on. According to a New York Times report, shipments of these vital components used in everything from smartphones and electric vehicles to missiles and jet engines have been halted at Chinese ports. The Chinese government is set to be drafting a new regulatory system that could permanently restrict exports to certain companies, including US military contractors. Now, this move is part of China's retaliation against US President Donald Trump's aggressive trade policies, including the steep tariff hike on Chinese goods. China currently procures and produces around 90% of the world's rare earths, 17 elements essential to high-tech industries. And it's not just the restrictions on rare earth minerals, but China has also announced new visa restrictions on certain US personnel it accuses of bad behavior related to Tibet. The move comes just 2 weeks after the US imposed additional visa curbs on Chinese officials over restrictions on foreigners' access to Tibetan regions. Now, addressing the media, Chinese Foreign Ministry spokesperson Ling Jian move, calling Tibet an internal affair and accusing the US of abusing visa policies and violating international norms. Listen into what he said.
Tibet affairs are purely China's internal affairs, and the US abuse of visa restrictions on Chinese officials on Tibet-related issues seriously violates international law and basic norms governing relations. In accordance with the relevant provisions of the Foreign Relations Law, and the Law on Foreign Sanctions of the People's Republic of China, the Chinese have decided to take corresponding visa restriction measures against the US personnel who have behaved badly on Tibet-related issues. At the same time, we oppose any person from any country meddling in Tibetan affairs on the pretext of so-called human rights, religion and culture, and people with ulterior motives interfering with and destroying the peace and stability of Tibet on the pretext of visiting Tibet.
And staying with China now, in a bid to strengthen trade relations amid ongoing tensions with the US, Chinese President Xi Jinping held talks with Vietnam's Prime Minister Pham Minh Chinh. This marks the first stop of Xi's three-nation Southeast Asian tour. Now, during the visit, the two countries signed dozens of cooperation agreements focusing on areas like production, supply chains and railway collaboration. Xi Jinping also met with Vietnamese National Assembly chairman and is scheduled to meet President Luong Quong today. The visit comes as China faces a 145% US tariff, while Vietnam is in talks to reduce US tariffs of up to 46% set to take effect in July once the global moratorium expires. And continuing with our coverage on China, the country's exports saw a massive surge in March as factories scrambled to dispatch goods ahead of the latest US tariffs. However, the ongoing trade war between the two nations, China and US, has lowered expectations for Chinese factories and the overall economy. Now, in the first quarter of the year, Beijing's trade surplus with the US rose to nearly $77 billion, highlighting the growing imbalance amid escalating tensions. While the short-term boost in exports may offer some relief, experts warn that the long-term impact of the trade war could be far more damaging to China's economy. Take a look.
Chinese trade felt the effects of Donald Trump's tariffs even before the levies kicked in. Figures out Monday showed exports surged over 12% on the year in March. That was around 3 times the increase forecast by analysts. The numbers suggest factories were rushing out shipments before the tariffs took effect. However, the figures could now plunge, with China facing levies of up to 145% on most shipments to the US. One economist told Reuters it could be years before the export numbers return to the level seen in March. Monday's figures also pointed to weak domestic demand in China, with imports falling 4.3%, or more than double the decline that was forecast. That means policymakers could struggle to make up for any downturn sparked by a drop in exports. Economists at Goldman Sachs and Citi have already cut their growth forecasts for China as a result of the trade turmoil. One market expert said a plunge in soybean imports, much of which come from the US, suggested state firms in China were already shunning American produce. Overall, Beijing's trade surplus with the US rose to almost $77 billion during the first quarter. That's likely to keep the country in Trump's sights, given that closing the gap is at the top of his agenda. With China vowing to fight US tariffs to the end, Monday's figures don't bode well for any easing in tensions.
All right, and moving from China to the US, chip giant Intel has agreed to sell a 51% stake in its Altera programmable chip unit to private equity firm Silver Lake for as much as $4.46 billion. The move marks the first major shakeup under new CEO Lip-Bu Tan as the company looks to turn around its struggling business. The deal, which values Altera at $8.75 billion, is expected to close in the second half of this year, far below the nearly $17 billion Intel paid for Altera way back in 2015. Take a look.
Intel announced on Monday that it agreed to sell its majority stake in Altera for almost $4.5 billion, sending its shares up as much as 6.5%. It's the first major move under new Intel CEO Lip-Bu Tan, who replaced ousted company veteran Pat Gelsinger just 1 month ago in an effort to revive the struggling chip maker. Shedding assets is at the center of Tan's strategy after several past CEOs failed to diversify beyond the company's mainstay and server chip business. The leadership missteps have left Intel struggling to gain a footing in an AI industry dominated by NVIDIA, while rival AMD threatens its stronghold of the central processor market. Since last year, Intel has taken steps to spin off Altera as a separate unit. Altera makes programmable chips that can be used for various purposes, ranging from telecom to the military. The deal, expected to close in the second half of 2025, values Altera at $8.75 billion, a sharp decline from the nearly $17 billion Intel paid in 2015.
Now, Sony, meanwhile, has announced a price hike for its PlayStation 5 console in several markets, including Europe, Britain, Australia and New Zealand, citing high inflation and fluctuating exchange rates. The price of the PS5 without a disc drive will now increase by as much as 11%, reaching around $570. Take a look.
Sony's PlayStation 5 just got more expensive in some parts of the world. The Japanese tech giant said it will hike the console's price in markets in Europe, Britain, Australia and New Zealand. It cited high inflation and fluctuating exchange rates. Sony said it will raise the cost of the PS5 without a disc drive by 11% to €499.99, or just under $570 from Monday. The price of the same device will rise by a tenth in Britain to nearly $567. Manufacturers of electronics face a number of headwinds. They include trade disruption in the wake of tariffs imposed by US President Donald Trump. Sony's Japanese rival Nintendo said earlier this month it will delay the start of pre-orders for the Switch 2 gaming device in the US. That as it examines the potential impact of tariffs. The Switch 2 is the long-awaited successor to its hybrid home portable Switch and is due to launch in June.
And to end the show in a historic milestone for space tourism, pop star Katy Perry and 5 other women launched into space on board a Blue Origin rocket, successfully returning to Earth yesterday. This marks the first all-female space flight in over 6 decades. The journey began with a powerful liftoff from the West Texas desert, where the 6 pioneers of space traveled to the very edge of space, experiencing a brief moment of weightlessness. Take a look.
Liftoff. Pop star Katy Perry and 5 other trailblazing women soared into the sky Monday aboard a Blue Origin rocket, marking the first all-female spaceflight in over 6 decades. The star-studded crew comprised Jeff Bezos' fiancée, Lauren Sanchez, CBS host Gayle King, former NASA rocket scientist Aisha Bowie, human rights activist Amanda Nguyen, and film producer Carrie Ann Flynn. Lifting off from the West Texas desert, the 6 women traveled to the edge of space, where they experienced a brief period of weightlessness.
That's our pink moon. I love you, Jeff.
The capsule touched back down safely on Earth just 11 minutes later, cheered on via live broadcast by Blue Origin, the space company founded by billionaire Jeff Bezos.
Welcome back to Earth.
The mission is being hailed as a huge milestone for Bezos' new Shepard vehicle and the future of space tourism. In an interview after landing back on Earth, Katy Perry said she felt
super connected to love. So connected to love. I think this experience has shown me you never know how much love is inside of you, like how much love you have to give, and how loved you are until the day you launch.
All right, we will leave it at that on this edition of Morning Brief at 9, but news continues right here on News 9, so stay tuned and thanks very much for watching.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy.